A lot of people in Africa don't know about the work of your bank. Could you just give us a sense of what your footprint is in Africa?
Well, first of all, basically the institution was born out of a need. It will be recalled that many international banks were retrenching from Africa in the 80s. That's when the bank was established. Since we were established, that is 1993, we started operation and financed more than $10 billion worth of African trade from 1994 to up to now. And we finance trades in more than 33 African countries since then. So that is essentially what the bank has been doing.
I think trade finance is one of those more scientific elements of banking, or it seems to be. People don't really understand what it entails. But what we do know is we've got a new breed of entrepreneurs. We want access to global markets. We want to build up Africa's profile in international trade. Where does your bank come in?
First of all, not only trade finance is the engine for growth and development, as was demonstrated by Southeast Asian countries, but Africa has not taken its fair share of that trade. And that's a role that the bank is trying really to have. Diversification of African exports, it's needed because for the past 50 years, African countries have been still exporting essentially raw materials. And that's the orientation that we have been giving to the bank. International commercial banks are financing trades, letters of credit, things like that. But we want to be more specialized in the diversification of African trade. And we have a program for that, which we call Export Development Finance, where we are empowering African entrepreneurs to be in a position to diversify the trade.
At what point do you have a convergence of the work that you do and policy? Because many people would say if you want to diversify African trade, move into areas of beneficiation, into tertiary product making, it's the governments that must create that enabling environment for manufacturing, for instance.
You are correct. As an observer, because our institution has an observer status at the African Union, we've been participating in many meetings where we are encouraging governments not only to develop export promotion schemes, but also ensure that you have the proper infrastructure for trades in the continent. It's a task that is a long-standing task, but we are engaged into it.
I mean, you use the word infrastructure, and I know you're referring to business infrastructure, but it's been estimated that a lack of physical infrastructure, utilities in Africa, has added 40% to the costs of doing business. Do you think African governments are doing enough beyond pledging to invest in infrastructure? Are we seeing any tangible investments?
Certainly we've not seen enough of it. You will recall that under the NEPAD there was a program to develop infrastructure in Africa, and that has not been forthcoming. We are making some proposals about using African external reserve to work for Africa, and those African reserves can be used to develop those infrastructure. What good does it do to an African farmer, for instance, to produce some goods if he cannot move it to town or to export it?
You talk about reserves, and reserves have come up in the form of currency stability in Africa. We don't have a lot of tradable currencies, but what could we do to try to stabilize currencies for access to markets?
Well, first of all, under the African Union, there is a plan to have some common currencies. In West Africa, for instance, under the ECOWAS, you already have a certain group of countries which have the same currency. These are the CFA countries, and then the other countries are trying to work on convergence criteria so that they will get a common currency. But it is important that we work towards having some kind of unification in that area.
And then finally, in terms of convergence, we've seen the Common Market Protocol in East Africa, but you don't really hear of many more steps for further integration outside of, say, COMESA or East Africa. The institutions or the structures exist, but you don't really hear of consolidation?
It's a long process. You will recall that it took more than 50 years in Europe to get to that. What is needed is that they should continue the effort of integration. The East African, the COMESA, ECOWAS also is a good example I think you should look at. The one that has been the weakest point is the Maghreb area, where we have not seen really proper integration. But as you rightly said, there should be some convergence, and we have to push those countries to do that. And the role that the bank is doing in that is providing advisory services in that.